All right, welcome to today's webinar. And this is a webinar where I'll be very generous with knowledge and sharing with you things you need to do starting now to trade profitably in the Forex market. Now, for those who have been following the market, you realize that, or you notice that the market has been rather slow, sluggish and all that. But this past week, the market did make some major moves. In my last video on my YouTube channel, Pips Casa, if you've not subscribed to that channel, you want to do so now. I did share this chart, GBP USD. After doing my analysis on DOGE and Bitcoin, I did share the BTC USD, sorry, the GBP USD chart, and I said the market is at the point where we should see a major sell. And what was the reason behind the sell? We saw two major bullish teacups here that would create a drop. And in the video I said, when you see a structure like this, what you want to expect to see the market do a dip in price before it continues in the bullish direction. And that sell is looking to be, I did say in the video that it's going to be about 1,000 plus pips or thereabouts. So if you've not seen the video, go check it out on my channel, Pips Casa. And if you've not subscribed to that channel, you want to do so, because that's the channel where I drop relevant information that would improve your trading. Like I said, this is a market that will pay you for the rest of your life, right? So the problem with most of us is that we tend to want something that will give us quick returns, which is normal. It's normal, right? There is nothing to be ashamed of about that. There is nothing that's not something that you want to say, okay, that's a bad behavior. No, we all want something that will give us quick returns. Even I want something that will give me quick returns. But this market is a market that will give you returns over time. So it's a market, once you rent it, you will use to make money for the rest of your life. So it's all a matter of you determining how much you want to make from it. Yesterday, someone sent me a message asking for signals. Now, there are two reasons. One major reason actually, but I'm going to just tell you two reasons why I don't subscribe to people running out for signals. It is not sustainable. It's not sustainable, I will tell you. Because some people believe that, okay, if I can get someone to give me steady signals, I'll just take people's money and use it to trade and then pay them a certain percentage at the end of the month. But the truth of the matter is that that strategy is short-lived. It doesn't have a long-term goal. And as a business person, whatever it is you're doing, you want to make sure that it's something that you can scale, something that is profitable. If you can't scale it, that is, you're not seeing returns over time, then you're not in business. What you're just doing is trying your luck, all right? So you don't want, there is no try your luck in Forex. Forex is a market that requires you, consistently, strategically running the show. So this is the webinar where I'm going to walk you through ways that you can begin to make money trading the Forex market. So step one, what I do is chart analysis. This class has been recorded, so after this, you could go check out the recording on my channel, Pips Casa. If you are subscribed to it, you will get the notification, right? So you don't need to ask, where will I get the video? If you're subscribed to the channel, you get the notification as soon as I drop it, all right? So the first thing you want to do for you to start right about now, is to create a trading account. I want to assume that you already have all of that, so I'm going to skip all those baby steps. So you already have a trading account, you already have a broker account, and you already have plans to fund that account and trade with that account. So one thing you want to do, very important, before you start clicking buy and sell, is to have a good idea of chart analysis. You should be, somebody on Instagram called it, you should be a chartist. I saw a post where they were saying Forex is a scam and all that, and the guy was trying to defend the whole Forex market, and he said you should be a chartist. So the phrase was funny, but it rings true. You want to understand how to properly analyze the chart, because that's where the money is. The market has been slow this past week, this past month. Let me just use that, because the whole of the Biden administration You know, they've been trying to find their footing. They've been trying to, you know, what's the word now? Make up for all the lapses from the previous administration. So currently, all of those things affected, and also the lockdown in London, in Europe, and all that. But lately, there's been some kind of adjustment. People are beginning to return to to their workplaces. Companies are beginning to open. You know, industries and all that. There is about to, or there is beginning to be that exchange, you know, of money, and that is what affects this market. This market is a money market. And money is not made, money is exchanged. So the more time money is being exchanged, the more time money begins to flow. So people who believe that they will make money by hoarding money, they're just making a very crazy mistake. You don't hoard money. You don't make money by hoarding money. You make money by exchanging money. So you exchange value. You give value, you get money. You want to make money, that is just the fundamental rule. You give value, you get money. That's the same thing that happens here in the Forex market. As long as businesses continue to thrive, as long as people continue to, you know, sell their products and create new products, this Forex market will continue to thrive. So it is from that thrive, from that flourish that you and I are profiting from. So you come to the market and you look at pound and the dollar. If there is great business between the United States and the London market, you will see it reflected right here in the market, and that is the opportunity you are looking for, right? So first thing first, create a trading account, have a chart, and begin to analyze the market. There is no shortcut to this. So, you know, a lot of people want shortcuts. They want, what can I just see now to just take buy and sell. There are no shortcuts. You have to study the chart. You have to study the market. You have to have that clear grasp of you studying the market. So if you're still struggling with properly analyzing the market, if you're still struggling with studying the market, then you don't want to commit funds to this. You don't want to commit funds to this at all. Because if you're committing funds to this and you've not have a good understanding of it, then you are wasting money. That's just what you're doing, wasting money. There is no hope, I hope to get lucky in this market. There is no, I hope to get lucky here. It is, I have seen this and that, and this is what I'm going to do to get it. So I want to make $100. How can I make $100 in this market? What opportunity will I need to see to make $100? You spot the opportunity, you go looking, you go hunting for that opportunity. The minute you see the opportunity, you take it, you make your $100 and you get out. So that's what the market is about. It's about you strategically saying this and this is what I want to do. So this chart that we're seeing right here is, let me just take all of this. The reason why I left this is so that I'll just use it as a point of reference. Let me just pick out something else because I'll be doing another video right after this for that point of references. So first off, whatever instruments you're analyzing, gold, silver, coffee, cocoa, dollar, euro, pound, whatever it is you're interested in trading is all here. Crypto, Bitcoin, Doge, Cardano, whatever, it's all right here in the market. There is a chart for it. As long as there is a chart for it, it just simply means that you can trade it. So looking at the chart is for you to now say, okay, this is a sell market, this is a buy market. What are those things you need to see to say this is a sell market, this is a buy market? Number one, clean out the chart. Very important to have a clean chart. You can't see with some people, you know, loads their market or their chart with so many indicators. The indicators are so much, even they are blind, that even they can't see shit. But they just leave it there, like, because they feel it is impressive. There's no trying to impress someone here in the market. It's either you are making money or you're not making money, right? Lately, I've not been making money from this market. I'm just going to say bluntly because the market has not been giving me opportunities for me to make money. So for a very long time, I've not made money from this market because I have not been trading. And why have I not been trading? Because the opportunity for me has not presented itself. That's the kind of trader I am. I am very conservative. I don't just jump into stuff because it's there. I only enter when I see the opportunity. So for the past months, I've not seen opportunity and I have not traded. So that's what the market does for you. That's what the market does sometimes. It shows you the opportunity, you cash out big. It doesn't show you the opportunity, you stay in your lane. So it's very, very, very important that you know what you're doing. So you're looking for buy or you're looking for sell. So when you see this market, this this beautiful chart staring at you right here, it is only going to tell you either of two things. To tell you to buy or to tell you to sell. So what or how will you be able to interpret those buy and sells? That's the whole essence. That's the holy grail of learning to trade. How will you be able to say this is a buy, this is a sell? Or how will you be able to see that the market is showing you buy, the market is showing you sell? It is by you analyzing the market using market structure. So everything in life it follows a structure. Everything in life follows a structure. If you don't have structure in life, you'll be living a very, jagged life, or a very scattered life, or a very jaga life. So you don't want to live a rough life or an unstructured life. So the same thing also with the market. Everything follows structure. So if you want to make money, then you must understand the structure of the market. And these structures come in various forms. They come in shapes, they come in sizes, they come in patterns, they come in waves, they come in angles, they come in direction, they come in different ways. So as long as you're able to spot these waves, these angles, this direction, then you will be making money consistently from this market, unless you don't see what you need to, you don't see the opportunity. Like I said earlier, I've not made money for the past month because I've not been trading, all right? Because the market hasn't shown me the opportunities. I've not been trading, because this is not where you want to say, let me just try my luck. This is not a casino. This is a money market where you want to exchange value for something. So first things first, have a very clean chart. A very clean chart would help you see clearly. And like I said, you only want to look for either of two opportunities, buy or sell. So looking at this chart now, how will you know whether it's a buy or whether it's a sell? There are two simple principles as far as basic trading goes. Two simple principles. One of them is the market, when it is at a point or at a level or at a zone, we begin to look for sales. And when it's at a point or at a level or at a zone, we begin to look for buy. Because this is money, and there are investors in here that drives price or that allows for the driving price. So these people, one of the things that they do, or one of the things that influences price being driven, is how they go about trading commerce and all of those things. So if, for example, Japan, they are very heavy in manufacturing and production and all that. If they are having to, they want to produce they want to send out a new product, and their major market is the United States. If the price of the dollar outweighs the price of the yen, they won't make money because they're going to produce it using their own currency and all that. And then when they want to sell it or export it to the United States at the rate of the United States dollar, it won't favor them. So what will they do? They'll all come together. All of the central banks will come together, and then there will be a crazy legislation or a crazy rule or a crazy whatever. They'll bring it up, and then they will drive the price down. So the reason why they are doing this is so that when they begin to carry out exchange and all that, they will do it for value, they'll do it for greatness. So when a particular instrument or a particular currency is at its peak, in essence, what I'm saying is that when a particular currency is at its peak, or at a point where you yourself will see that this point is extremely high, what you expect to see is a dip in price. It's just simple. You're expecting to see a dip in price. A dip in price will follow. So as a trader, your goal is to say, this is the point where I'm looking for sales, and this is the point where I'm looking for buys. Now, a dip in price happens virtually everywhere. It happens across the market trends. It happens up and down the market. So you're seeing the market at this point, you're expecting a dip in price. You're seeing the market at this point, you're expecting a dip in price. So all of these instruments, all of these stuffs right here are things that you can now begin to say, okay, these are the things that I will use to influence my decision to take a buy or take a sell. All right. So at this point right here, the market is at a high. And then at this point right here, the market also is at a high. So both of these things shows you that this is about to be a sell market, because if the price continues to be too high, most people will not, there won't be much value for it, because, I mean, it's too expensive. So they'll begin to flush the price and all that, like we saw for G. Same thing also for G, right? So for every time the market reaches a point, an extremely high point or an extremely low point, expect to see a different price. Now, like I said, these extremely high or low points are pairs, but virtually every time they appear on all time frame. They appear across the trend. They appear high above the trend. They appear low below the trend or the market. So when you see them, you say, okay, this is a point when I should begin to look for buys. I should begin to look for sells. I see some traders look for buys. You know, they just pretty much jump into the market right about anyhow they like. They look for the market at this point. They begin to look for buys. Sometimes they're lucky, other times they're not. Like I said, this is not a trial and error market. This is a market of strategy. So you want to make sure that before you do anything, you're getting your strategy right. So take a look at this one to see how the market at this point. This is a clear crazy market. Like this is money, right? This is money. This market is just telling you to buy. That just what this market is just telling you to buy. So a very long time ago, I've been eyeing this current. Like I've been eyeing this. And it's so crazy that it has made that move. So now that it has made the move that I've been expecting it to make is just. It just makes sense for me to now begin to look for my opportunity, because it has just shown me now that I couldn't take out this zone, which is the point where it should buy. So can you see how this long crazy move happened? That is exactly how this one is going to play out. Like it's going to replicate this. That's what it's going to do. It's just going to replicate this perfectly. All right, how long it will take, we don't know, but it's going to happen. It's just going to be a straight long buy for a very long time. So some people will say, okay, this one now, let me start selling it. That'll be a very, very silly mistake, because you know, stuff like this, these are not opportunities for sales. These are opportunities for you to take buys, because if you're taking sales at this point, you're bloody wasting your time, and you're of course you're going to lose money. So there's no truth about it. But at this point, the question some of you will be asking is that, should I take a buy now? The answer is no, because when the market makes a move like this, most times it does a pullback, because I mean the market doesn't move in a straight line. That's what makes Forex very interesting to trade. It moves in waves. All of those waves gives you opportunity to enter the market. So you miss the move, you know, wait for the dip and then follow the market. Wait for the dip, follow the market. So as the market continues to undulate, as it continues to wave like that, it's creating an opportunity for you to take it. So you miss this move, wait for this to take it. You join this, wait for this to take it, you join this. So you keep joining at every opportunity. That's what makes the Forex market liquid. That's what makes it volatile. That's what makes it popular. Unlike the stock market, that something just get listed, you know, a company launches the IP and all that, and then you get to see a continuous rise. As long as people keep buying stocks, it just keeps going, and then something happens, there is a scandal and all that, and then phew, you see a drop. That doesn't play out here in the Forex market. Forex market has that continuity. It has that rise, drop, rise, drop, rise, drop. So that rise, drop gives traders opportunity to take, and keep taking until they're exhausted, until they're tired of taking, and you know, and they clear. So when you see a move like this, no, don't jump in here. You missed it, all right? So you want to wait for a little dip in price before you take the move. So I've just shared two things now, right? Or is it three? I hope you're taking note. Anyway, you watch the recording. The first one is that always look for the market at major levels, because when price approaches a peak point, a level where it is very almost impossible for these guys to transact, or you know, without dropping or driving price down or driving price high at some point, they will do so, right? They will say whatever, they will meet, they'll come up with a law, a rule, a something that will drive the price. So when the market is at that point, you want to make sure that you are on guard, you are woke on it, you are seeing it, so that the minute it happens, you jump on it and you make money, right? So right now, this one is ready to go, like it's ready to go, but wait for the drop. Wait for that drop before you take it. So the question some of you will be asking now is that, okay, at what point will I know that this is where I'll now take it? So what I'm going to do now, I'm going to clean this up, like clean everything up. And that is another basic thing that you need to learn. So I've taught you 1, 2, 3 basic, and here is the fourth. The fourth is, there is a tool called the Fibonacci retracement. All of these videos are on my channel. So I think I taught how to use the Fibonacci on my channel. So make sure you're subscribed. If you're not, well, good luck to you. So this is how you can now begin to say, this is the point where I should take a buy, this is the point where I should take a sell. Using the Fibonacci retracement, this tool is very powerful. Is synonymous to a Taylor's tape rule, right? The Taylor has a tape rule, the Forex trader has his or her Fibonacci. So the Fibonacci tells you direction where you can now begin to look for opportunities to take a buy. So here is your entry point, here is your entry zone. So can you see this point right here? this 50% point, or let's just bring it halfway down here, that is the point where you begin to look for buy. So what I'm expecting to see the market do is to take a drop, is to dip in price. So when that dip happens, take your market, because the minute the dip happens, then you know that, man, the market is ready to go. So some people will say, okay, if I know that there is going to be a dip in price, should I sell this? Yes, you can sell it, but I don't advise it, right? I don't advise it, but you can sell it. If you want to sell it, you can sell it, because can you see this crazy up thrust right here? This is a crazy market move, and right now I am very unhappy that I missed it, because I've been eyeing it for quite a very long time. But I missed it, so I didn't take the money. I didn't make the money. That's fine. That's not my money, because there is an opportunity for this thing to drop to this point. It just might drop, here, because there is a zone here, but I don't want it to drop here, because when it drops here, the price is still quite high. But then again, if I see good reaction here, I'll take it. But other than that, this is a better point of reference. So using the Fibonacci, you'll be able to measure the move. After measuring the move, you want to target the 61.8 level. Some traders stay at 50%. 50% is too popular. Like, if you read all the Forex textbook, watch most videos, they tell you 50%, 50%, the market would retrace 50% of the time. In fact, there's a theory that there's a law, there's a principle for it, that price will gain or lose 50% of the time. So that being said, it just shows that most of these market makers, that there are some people in the market that their own business is to take from retail traders. So we call those ones market makers. They are not here to invest money. They are here to pump money to take. So as they are pumping the money, they're doing it just so that they will drive price to people's surpluses. So we call these ones market makers. So these market makers know that a lot of traders are at the 50%. So they take their money. The money these traders wait here to buy, these guys drive price down, right? So there are like 80% or 85% people staying on the 50% feed level. So that's the reason why I don't stay here. I'd rather stay at the 61.8 level, where the crowd is not much, and I stay there. Trust me, these guys are even going further than the 61.8%, all with 78.6. That's the reason why I don't trade 50% at all. What I do, I wait to see price reaction at this point, and then I take the market. So that's what you've just learned now. For those of you who are already trading, those of you in this webinar that are already trading, this is a trade opportunity that you want to go look at if you've not already seen it. So now you're seeing it, right? You want to target price at this zone. Watch price reaction at this point, because there is a point here, right? The market did create a point, so this was a point where it did a breakout. So we might see a retest of this point, and then price continues to rise. Other than that, if the market breaks this zone, then you know that it's coming here. So you have two zones to watch. In most of my sessions with my premium traders, I always tell them that you don't want to have one zone, because this market does not know you. It doesn't know you at all. The market is not here to make you rich. The market is here to take your money. So you don't just say, I'm looking at one zone. You want to have multiple zones. So here is one zone, and here is another zone to watch. So the minute the market, if it bounces off this zone, then you know that this price will hold. Well, the minute it breaks this zone, then you have here and know that it's coming back here. So that you know that the market is going to get to this zone doesn't mean that once you see price, say you jump in. Well, if you do that, the risk for you to make money is 50%. And we are not trading 50% risk. We're looking to trade 85 to 90% risk. What does that mean? It means that 85% of the time you're making money. 90% of the time you're making money, not 50%. 50% is just too evened out. So you don't want to trade an evened out market. You want to trade a market that has high probability. So the probability of you jumping in the minute the market touches here to make profit is 50%. So don't do that. See clear opportunities, and of course these are those patterns you begin to see, those candlestick formations you begin to see, and all of those things you begin to say take the trade or don't take the trade. So here is zone 1 and here is zone 2. So I've just shown those who are currently trading that are on this call that this is a trade opportunity you want to take for the week. Now, why am I excited about this particular opportunity? Two things. The market has given us a precedent. This is a clear, crazy, massive move. And all of this move that happened here these are all retracement because the market did impulse and then it dropped. So this is what we call an ABCD pattern, or we call it a rhombus. Most people know it. So when you see structures like this, it just tells you that you should make money, you should take the buy, because this is going to be a very long-term buy. So the analysis I did before other people joined was for you to say, okay, it's from this point to this point that I will take my buy. But what is the major market? The major market is a buy. Where will you take the buy from? I just showed you that you want to wait, you want to fib that move that just happened. I want to take the buy from the 61.8%, but watch the other zone that I also showed you. So go analyze it on your chart and make it happen. All right, so we've just learned how you can spot opportunities from the market, that the only thing you can do the minute you come into the Forex market is to either buy or sell. Now, this market is a private business, really. The market is a solo thing, all right? The only reason why most people know that I trade because I train. Other than that, this is a market where you just stay in your house. Your neighbor doesn't even need to know that you're a Forex trader, all right? It's just between you and your laptop and your broker. So, it doesn't really require much noise and all that. See opportunity and take your trade. So I've just taught you that you can only do either of two things, buy or sell. And how will you begin to see these buy opportunities? By seeing the market at major levels, at key zones, at key points. And if you were able to spot this market at key levels, at key zones, then you are 60% into making profit. So another thing I also said that these levels present themselves along the trend and up and below the trend. So if you're seeing a market, a market, say GU, GJ, or any instrument you're interested in trading, be it gold, if you're seeing it, the first thing you want to do the minute you open the market, let me pull out gold. The first thing you want to do is ask yourself, at what level is this market at? What level is this market at? If the market is at the buy level, is it at the sell level? So currently, so currently the market is at a sell level. So you can see where gold is at now. So any move you're seeing, and any move you're seeing or opportunity you're looking for should be a sell opportunity. You don't want to go be looking for buy opportunities here because it's already at the sell level, right? On looking at a bigger picture, then you can now begin to say, okay, this and this is what I'm seeing, and this and that is what I'm seeing. So take a look at this picture right here. It's just clear, even to an untrained eye, that this market is at the sell zone. Now look at what it did. It didn't try to break that zone. Like, I'm going to break it. I'm going to show these people that I'll push through. And it tried. It broke it. It came back down. Like, can you see how far down it came back? Like, straight down like that. Straight, crazy, massively down. And what did it do after coming down? Crazy down. And then it went back to do a clean retest. And guys, what are you seeing? A crazy sell. So gold is on a decline. It's going to be a massive sell right now because gold is this move. This is, oh my God, let me just blow this out so that you guys can just see this right here. Let me blow this out. Can you see this? Can you see this? This structure, this candlestick formation, this candlestick pattern you're seeing right here, this is just telling you that this market is ready, like getting ready to go. It's getting ready to go. So guys, you don't want to miss the opportunity. Let's drop to lower time frame and begin to see areas where you can enter from. Okay, so all of these things I've just mentioned now, I'm trying to use them for examples. So on the monthly time frame, we've seen that there is a massive sell candle right there. Very, 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 very massive sell. What a lot of people would call an engulfing candle, a marabuzo or whatever. So what are you seeing on 15 minutes? That there's about to be a pullback. Like I said, major sells follows pullback. So these 15 minutes just showing you that there's about to be a pullback. So the minute that pullback is done, take your sell. So now that we've seen that there is about to be a pullback at this point, now let's drop back. Let's go back to the higher time frame. Say let's go back to the daily time frame. Let's pick out that crazy sell that happened. Because what we're looking for now is where can I enter the sell from? So you've already established that this is a sell market. So the question you ask yourself is, where will I enter the sell from, right? So like I said, bring out the Fibonacci. The Fibonacci is to a Forex trader what a tape rule is to a tailor. So bring out your Fibonacci and measure out this crazy sharp move. Some people might do this or do that, but don't taking it from here. There really is no point. Take it from here. That's better, all right? Because all of these moves, this one already created moves. So this is the current move. So what zones are you looking for? Of course. Oh, sorry, I didn't place the Fibonacci well. Let me remove this. All right, so bring the fib. This is a sell market, and then the market side from up there to the down level, right? Great. So what are you looking for? You want to see a little pullback. Let me use the pen. You want to see a little pullback. So we've seen on the 15 minutes time frame that the market is currently about to do a pullback. So you want to see a little pullback all the way to where? To the 61.8%. All right, to 61.8%. So what does that tell you? It means there's a zone here. But guys, I'll just tell you for a fact that, you know, this is zone 2. You can have this as zone 1, but that right there is zone 2. So you have this as zone 1, but this is zone 2. So you want to have a minimum of 2 zones, 2 levels, 2 areas to watch. Don't just say I want to see only one side. No, see many places. So this is zone 1, this is zone 2. So if market breaks this point, then it's coming here to react. So from this point, take your sell. So it is now that you can now begin to wait. Some people say, should I buy it? Can I buy it? Yes, you can buy it. You know, if you have the confidence to take whatever drawdown comes up, because what you're doing, you're trading against the trend, right? Whenever you're buying a pullback or you're trading against the market trend, and that's the difference between trading from knowledge and trading with a robot. You're trading the robot doesn't care. Robot is just designed to spot buy and spot sell. So robot will buy this, you know. So when the robot buys it, some days it makes money, other days when it buys that and the buy doesn't happen, market continues to drop, then you lose money, because there really is no saying that this is where to stop. There's nothing telling you that this is where to stop. It can continue to drop. Nothing here tells you that to stop here. The only thing you've seen that it has dropped this far, but there is no telling that it's going to stop here, right? The only thing you can control is that the minute it begins to do that pullback, you have that control to take the continuation. So what is the point of continuation? 61.8, 78.6, or somewhere in between, and then you're able to take your trade. So we're going to stop here for today. I'm going to use the next 5 minutes to take questions if you have any questions. So if you have any question, now is the time for you to ask me, because after now, if you want to ask me a question, you pay me money. So unmute your mic if you have a question to ask and go about asking the question. So as a way of summary, while I'm waiting for you to ask the question, as a way of summary, like I said, you can unmute your mic when you have a question and I'll pause and answer them real quick. So as a way of summary, trading the Forex market requires you having an understanding of market structure, because when you have good grounds in the market structure, the rest is easy, right? The rest is easy. The only thing you cannot begin to say that I'm not trading or I'm trading. Like I told you guys, I've not traded for a very long time, like months now. I've not traded. I've not made any money from the Forex market because I've not been trading. So that's the only thing that will now stop you. Say, okay, I'm not trading. Other than that, that you don't know how to trade will no longer be an excuse. You know how to trade. You want to make a quick $100. You want to make a quick $20, $30. You know where to come to make those money. And from what I'm seeing right now, I think it's time I get off my I'm not trading and start trading, because it's obvious that the market is awake. The market is open. The market is woke now. Look at all the moves that happened just last week. So this is crazy. This was Friday, Thursday, Wednesday, Tuesday, Monday. So that means last week the market moved massively, moved well. So now it's ready to trade, it's ready to go. It's ready to go, like it's ready to go. So the only thing that it needs me to do now is to fund my account and start trading. So that's what knowledge of Forex trading gives you. That's what knowledge gives you. It gives you that freedom to say, I'll trade today, I won't trade today. I want to make $100, I know where to go, right? And all of that, and all that, and all of that. So this is what we'll call it quit for this webinar. Remember, you want to subscribe to my YouTube channel if you've not done so, because I give relevant information that are information that will make you make money, not information that will just load your chart with impressive stuff that will now excite your friends, and friends say, wow, you're so good at Forex. You don't need all this stuff. What you just need to see is buy or sell. And from what I've just shown you guys, right, you can see how straightforward, how easy it is, that you know, you don't need too many things straight. You just need a very simple market structure, a simple chart, and the rest is history. Okay, in the absence of any question, I'm going to wrap this up. Let me let me see if there are any questions in the chat. So if you're shy to speak, you can type your question in the chat. I have 5 minutes, less than 5 minutes actually to go. All right. So ask the questions if you have any. Let me pull out where these are. Guys here. Olaleye, can you see USDM exit? Can you see how crazy? How oh my god. So this one too is also ready. Let me clear this.
Even Euro USD. Euro USD.
Yeah, sorry. type your this where you are. It's very noisy. As if you're in a bus. So last week, yeah, you know, the market is ready to go, guys. The market is woke. Market is woke. So it's for us to now, you know, awake and go. The market is ready to go. Like look at USD's look at GU sell was just too crazy. Like GU gold. Can you see all of that? I said even Euro USD. So let me pull up Euro USD. Let me pull up Euro USD. Just real quick, and then we'll check out crypto. We just check out Doge and Bitcoin, and that will be a wrap. So Euro USD, they're all dropping. Let me quickly check Doge. I'm running out of time. Okay, so I've been advocating for Doge. Like I've been saying buy because with unlike currency, trading crypto is just about like reinvesting like in stocks. So you buy when it's low and you hold it and then allow it to run out, right? So Doge is also at the point where you should begin to look for buy opportunities and all of that. So I'm going to call it a day at this point. So I'll see you again next time. Thank you for joining this session. I hope you learned something. Send me a message if you did, and if you have more questions to ask, send that also as a message and I'll respond. So have a great one, guys. I'll see you again next time. Bye. I don't want this thing to end. Thank you. Goodbye.